Anyway, the correct pronunciation, which some people disagree, is lessor. People from Nairobi say Lisa. So a lease is an agreement where one party, which the lessor, conveys to the lessee in return for payment or series of payments, the right to use an asset for an agreed period of what? Time. Obvious. Key terminologies. We have what is called commencement of the lease term, and number two, inception of the lease term. From your normal grammar, between commencement and inception, which one comes first? Inception. So inception is where the lessee and the lessor enters into an agreement. They enter into the principal provisions that you will be using this what? Asset. Then the commencement is when now the lessee has the right to start using the leased asset. And I'm not going to read that. Economic life, of course, is the period an asset is expected to be economically useful. Then we have contingent rent. The word contingent as grammar, contingent means subject to. Subject to. Are we going for out on Friday? Yes, we shall go. However, it is contingent. That is an accountant speaking. What does it mean? We shall go, but it is subject to confirmation. It is contingent. Contingent means subject to. So here we are saying it is that portion of the lease payment that is not fixed in an amount, but which is based on certain future factors, e.g., percentage of future sales. So you can give someone your car on a lease agreement that you will be giving me, like this Uber. You cannot give someone your vehicle for Uber on a lease agreement. Is that true? And they should be giving you how much? Eh? You have said how much? Yes, it is 8,000 per week in Nairobi. That is the rate actually. 8,000 per week. So at least it should be 34,000 on the minimum side per month. Are you aware? So if you agree with the Uber person that you will be giving me 32 in a month, then you can have another provision. However, if you go outside Nairobi 3 times in a month, you will be adding me something on top. Then it means the lease is what? Contingent. That amount which will be paid is contingent. It will depend, the incremental will depend on some future what? Factors. Someone is asking, just a minute. Also, the other name. Which page? Which page? Which page are you reading? The page which is in your book, you wrote, this notes you wrote. So me, I don't know, it depends on your handwriting. So I don't know if you are in which page. Those people using phone, you are in which page? Page 1. The people using phone, they are in page 1. Then gross investment in the lease. It is the minimum lease payment receivable by the lessor under a finance lease and any guaranteed residual value accruing to the lessor. Right. You continue reading those terminologies. Types of lease. We have 2 types of leases. That is a finance lease and an operating what? Lease. So let's check a finance lease. But before we read, I can say casually. A finance lease is a form of a lease whereby the title of ownership, mostly, though not always, is transferred to the lessee. You use the asset, then at the end of the lease term, the asset becomes yours. Then that is a finance lease. In an operating lease, there is no that provision. You use the asset. Once the lease term comes to an end, the title of ownership and everything is still retained by the owner of the asset. Like this rent on houses. Can you stay in someone's house, then you say, I've stayed here for the last 10 years. Now I have ownership. It doesn't work. That is an operating lease. So we can read very fast. A lease is classified as a finance lease if it transfers substantially all the risks and rewards incidental to ownership to the lessee. Then we have characteristics of a finance lease. Number one, it transfers ownership of the asset to the lessee by the end of the lease term. The lessee should have the option to purchase the asset at a price lower than the fair value. Fair value is always the market value. At the date the option becomes exercisable. The date the option becomes exercisable means when they are entering in that contract, the lessee can have an option to even buy that particular asset. Then the lease asset should be of a special nature, such that the lessee can use them without major modifications. It means they should be in the right state of use. The lease term should form a major part of the economic life of the asset, even if the title is not transferred. So if economic life is 10 years, then someone is telling you, we are in 2022, year 10, so we're 2023. Year 10 is supposed to be 2024. Then you enter into a lease agreement. Now, then this person is telling you that I'm giving you this asset on this term for the next how many years? 15 years. So it means you'll be using a dead asset. Huh? Are you understanding what I'm saying? Okay, what is the meaning of useful life? The period the asset should be economically useful. Then this person, instead of giving you the asset, maybe in year 4. You know, at year 4, the asset is remaining with how many years to be economically useful? 6. But this person is giving you the asset in year 9. Then it's giving you for 15 years. It means you'll be using the asset when the asset is not even efficient or effective. So the lease period should form at least, if it is 10 years, give me year 1, year 2. You have understood? Yes. Operating lease, if any form, actually this is how the standard defines it, is any form of a lease other than a finance lease. The title of ownership is retained by the lessor during and after the lease period. Risk and rewards are not transferred to the lessee, and all the incidental costs to be incurred. Whichever. All the incidental costs are not transferred to the lessee. It should be lessee. Hey, I don't know how this person is writing. Anyway, incidental costs, who incurs? Who incurs the incidental costs? The owner of the asset. That is the person, the lessor, should incur all the incidental costs. In the new standard, actually this standard is very new. IFRS 16, very new. I think it came to effect around 2017. But why should I keep on saying around? Because I've forgotten. Can you just check for me, IFRS 16? I need to know when it became effective. From your Google platform. I want to know when, you can even Google like that. When IFRS 16 became effective. I need to know. Because sometimes you forget, then it catches up with you more somewhere. When did IFRS 16 became effective? It's very new standard, it's not old. Yeah? 2019, January.
Yes.
Yeah, it became effective in January 2019. 19, 20, 20, did we count 2020? Yeah, probably. Year standard in anyway, let's count 19, 20, 21, 22. That standard is 4 years old. It's very new standard. It replaced IS number 17. And we want to see what exactly was being replaced. So in the new standard, that is IFRS 16, both operating and finance leases are accounted for as finance leases. However, the lessor is expected to account for the leases separately. So in the books of the lessee, in the current standard, you will not even be able to see the difference between a finance lease and an operating what? Lease. What happens, and you take this seriously, not for class, but even for your general knowledge, very important. What happens, like Destiny, this space is not ours. It is on rental basis. So what you do, so this is an operating lease, it's not a finance lease, because the title of ownership is retained by the owner. So what you should do, which people are actually not doing, you agree, you are leasing out this property for what period? So let's say you have agreed that you are leasing the asset for 10 years. So you estimate this 10-year period, how much is the liability which I will be able to do what? To pay. So if you estimate in 10 years, you'll have paid maybe 20 million, then this 20 million, you need to recognize it in your books. You know the asset is not yours. You recognize that 20 as an asset in your financial statement. So what you recognize is not the building or the property. You recognize what is called, read this one, right of use on your Google platform. Put that one, then you read for me what Google is saying. So this is what you need to recognize in your books. The asset is not yours, but you recognize what is called right of use. Just the way I've written it, right of use assets. What does right of use asset mean? You got? So I need to submit. Oh, but Vera has copy pasted because she has not written. So let me read what she has copy pasted. But this one is long. Vera, you can do a summary. What she has copy pasted with, I think maybe is in line with what you are getting. Right of use assets represents a lessee's authority to utilize a leased item. Let me just stop from there. Those other stories. Is that what you are getting as well? Or you are saying what? If you interpret. No, it's the bundles. They have the bundles. The tougher they use. Anyway, okay. So, but it's more or less the same. Yes. So it represents the lessee's authority to utilize the leased what? Item. And your authority to utilize the leased item is based on the value or on that obligation. So the lessee will recognize a liability and an asset at the same time. And that is even what we do. And by the way, by extension, because I know here we have two people. We have people who are in the accounts, and even we have people who are in the audits. That is something you need to take into consideration very fast. When you are operating a business on a leased property, then you need to estimate in advance how much will we pay for this lease period. Then, after that, what you do, you prepare what is called lease amortization schedule in advance, year 1, year 2, year 3, like that, so that you can be able to know this year, this will be the interest. You know, there's always interest which is charged. This will be the interest, this will be the amount we are paying, this will be the outstanding balance. Then you amortize at the end, you are done, you give out the asset, then you eliminate it from your financial what? Statement. So what happens, and I repeat, whether it is an operating lease or it's a finance lease, the lessee, you know, lessee is the one using the asset, should account for them the same way. You bring them in the financial statement, but now because the asset is not yours, you recognize what we call right of what? Use. Then again, you recognize a liability because it is an obligation you're supposed to settle. Are we together? In the previous standard, which is none of your concern, they were being separated. The one we were recognizing was a finance lease only, with the expectation in your heart that the asset will finally become mine. But operating leases, the lessee was not supposed to recognize at all. You pay credit cash book as you pay. When your time comes, move out. Currently, that is not there. You account for them the same way. So tomorrow, those who are in the office and You are not the accountant, but you are near the accountant. Tomorrow you go and ask the accountant. I will wish to know how you account for this list premises where where we are doing business. Then I go, what do you mean? Then you just say no wonder, then you disappear. All right, so let's proceed. And accounting for finance lease at your risk. Accounting for finance lease. So how do we account for them? Upon lease commencement, the lessee should recognize a right of use assets and an obligation in the statement of financial what? Position. Right of use assets is considered to be the value of the leased asset less accumulated what? Depreciation. Depreciation, if the asset is depreciable, as time goes by, you charge depreciation. Depreciation is charged by the lessee, not the lessor. Whoever is using the asset is the one who incurs all the what? The costs. If you give me a vehicle right now on lease term, I want to go to Mombasa. Then along Mombasa Road, someone hits my side mirror. Do I call you that this vehicle of yours, the side mirror just being damaged anyhow? You don't even want me to know. Sure. So all those costs will be incurred by the lessee. Nothing much. Illustration. Illustration. Illustration, yes. Let's start with the handout or past paper. Past paper, they have just examined it once recently. But I have some questions in the handout. No. Let me start with that one in the past paper. Then I indulge with this one. So get out your past papers. Oh yeah, Asogomba not seen your question, but I hope you are answered it in the process. He was asking, do you depreciate the right of use asset? Yes, you depreciate on one condition, that the asset is depreciable. If the asset is depreciable, you depreciate it off. So get your first paper, August 2022, 1 December, yes, that one. August 2022, you search for that question. I just remember there was a question in August last year. So check for me, August 2022, question which I don't know. August 2022, who has gotten the question? Question 4, thank you. Page 5. So go to page 5, question 4. Yes. Page 5, question 4. May I want to start with that one? Page 5. That is the first time they were examining lease. So lease is hot cake. It can be examined anytime, anyhow. You are ready? Yes. So someone from online, let me just pick randomly. You know, I'm the one who normally reads every day. So I want someone from online. I'll just pick randomly someone to read. If I pick you, you know, there are so many people, so I don't know the criteria I'm using, but I will just pick randomly. Sharon Maina, please unmute yourself, then you read. So let me allow you to unmute. Yeah, even yourself, you can. So Sharon, unmute yourself, then you read for us the question. Whether they physical, you'll solve. Brian, so let's see Brian and solve. What? Alice na solve. Hii class iko na Alice. Oh.
Yeah, mimi nilisoma.
Read. No, he alisoma. Brian is the one who read last time. Maybe Sharon is not Amanda Jikoni. Online volunteer who can read. Someone must read.
I'm here.
Clara, read for that question. You know me, I don't know anybody online, so I'm just picking randomly. Clara. So online, someone's just saying, Clara should read very fast so that they should not come to me. Clara, read. Probably they have refused. But finally, they will have to read. Maureen, Someo Swali, read for us the question.
Okay, question 4.
You raise the voice.
Can you hear me now?
Yes, kindly read.
On 1st January 2019, Breakwood Limited entered into a contract to lease an item of plant and equipment from a supplier for a 3-year period. The terms of the lease were that Breakwood Limited was to pay 500,000 shillings each year, with the payments commencing on 31st December 2019. Initial direct costs incurred on the lease amounted to 30,000 shillings and were paid for by Breakwood Limited. The plant and equipment had a remaining economic useful life of 5 years at the inception of the lease. The lease contracts did not contain any purchase option for the lessee. Breakwood Limited can borrow at a rate of 10% a year. Required. Analyze the accounting treatment of the above lease transactions from the inception and for the 3-year period of the lease contract.
Thank you. So Sharon is saying she was reading, but she was not audible. Nobody could hear. So sorry for that, but provided you can hear me, there is no problem. So they are saying, analyze the accounting treatment of the above lease transaction from the inception. The inception we said is which date? Which date? You don't have to say it there. Just inception is which date? I know you don't, but you don't have to put it across. You see, it's telling me. Where I saying inception is 1st January. No, 1st January is as per the question, but I just want it literally. Inception is when you enter into the contract. You have met there in Java and you have agreed, I will list to you my what? Asset. Let us do what? Sign. So when the contract has been signed, that is what we are calling what? Inception. Then commencement is when the lessee starts using the leased what? Asset. So the examiner wants you to show the accounting treatment from inception when they agreed up to the lease is going for how many years? 3 years. And for each of the 3 years, year 1, year 2, year 3, you need to show that. So sometimes questions on lease can be terrible. You don't know even where to start from at all. You know, the question is there, but you don't know where to start from. Any question on lease, you cannot answer a question on lease without you preparing what we are calling lease amortization what? Schedule. Amortization schedule is a schedule showing how you will be paying the rentals. I call them rentals or installments. So you have agreed it is 20 million per year, you'll be paying 2. So show us that in a table, how you will be clearing that. Once you have that, you can be able to prepare any financials from that point. So at the inception, I want to know what was the obligation to the lessee? What was the right of use? and how much was paid maybe immediately. At inception, I will assess that. Then from there, I can prepare the amortization what? Schedule. I'm afraid, is there someone going for prayers? Because when I start, I will have to stop. Is there someone who needs prayer? Who is going for prayers? Or needs prayers? Is there someone going for prayers? I don't want to stop on the way. If yes, then we take the 5 minutes, then we kick off. It seems no one. All the break is necessary. Refresh up, then 3-5 minutes. I want when we start the question, we don't stop. So you can take a small break, then we proceed. We start. So what I want us to start with, I don't know that you have identified something here. What is the value of this asset which is being leased? What we given? They have not said. What they are quick to tell us is how much will be done what? Paid. Every year, these people will be paying how much? 500,000 per annum in arrears. At the end of every year, they pay 500. So at the commencement, not even commencement, at the inception, you need to know the value of that particular what? Asset. So to know the value of the assets, you have to discount. In effect, I don't know that you have started those things of discounting. Discount to the present value so that you can know what is the value of that particular asset. So we can use two ways. So come here and say, I can do it in form of working, but not necessary. Let's just flow with it like that. So you say value of the list. It is what? Machine or plant or what? It is plant. It's a what? Plant. Plant. So you can just call it initial lease liability. Yes. Call it this way. Initial lease liability. Initial lease liability. So the initial lease liability, you can say here, it was 3 years, starting when? January 2019. So 2019, 2020, 2021. So to know present value, you know what you will be doing. The constant cash flows, which they will be paying is 500, which we call the lease payments. So lease payments, they will be paying how much? 500. So capture 500 for the 3 years. So 500, like that. Then you bring the discounting factor. At what percentage? It is 10. Yes, 10%. So in finance, you are told to discount. You use this formula, 1 plus R raised to power negative what? N. 1 plus R raised to power negative N to discount for that. Yeah, online that is the position is okay. So this will be R is 10, so 1 plus 10 is 1.1. Sure. So this will be 1.1 raised to power negative 1, 1.1 raised to power negative 2, 1.1 raised to power negative 3. Then now, the discounted cash flows, which is the present value, becomes, so right up here, present value. So present value are the discounted cash flows. So what I want you to do for me, for uniformity, let's just round off to whole numbers. Take this, multiply by this, get there. Then what I want is the total. And for our uniformity, I've said you round off to whole what? Whole number. Do for me that. But if you were given the total obligation, there was no need of going that route. If you have an answer, you just post. Nobody will discriminate you. I can see online, Brian is saying it is 1243, 425. You have the same, eh? So 12, 1, 2, 4, 3. 1, 2, 4, 3. 420 what? 5. Or because some of you are doing FM, you know, there is always two ways. You will choose the one you want. If you are going on annual basis, then you check this formula for non. Okay, but this one is normally for non-annuities. Non-annuities are cash flows which are not constant. But no, this one is constant cash flow. 5555. So if it is constant, you can decide to apply this formula here. You say 1 minus 1 plus r raised to power negative n divided by r if the cash flows are constant. So I could do this still 500, but they confirm for me we get the same answer. 1 minus 1.1, but now n I'll raise to power negative 3 because I'm doing it one off. Then I divide by r, which is 10%, 0.1. So can you try if you get the same answer or something close to that? It should. If the cash flow is constant, you can always go for this. Or you can go yearly. The problem is the years are many. So you start with the brackets. Somebody who is done the same. Don't mess the board mass. You start with 1.1 negative 3. Divide, then you divide, then 1 minus whatever you have gotten. Then you multiply by 500. If you start with 500 direct, you will not get it. As Agomo is saying, 1243 450. Are you sure? It should always be the same. The same, eh? Yeah, it's the same. You get the same. It's also in the phone. Where's your calculator? This is a small one. Don't stop complicating issues. He's telling me that he's using table 2. Which table 2? FME all. Here, FR, there is no table. You will not find any table in FR. In fact, in exam, if you tell the supervisor that I need a table, people will laugh at you. We don't have tables here. Tables are only in FM. Here, we don't have tables. So online, can somebody confirm, because they are confirming it's the same? Can someone confirm? I think, can someone confirm you're getting the same? 12, 4, 3, 4, 2, 5. Stop using the table. Thou shalt not use the table. Maureen, yes, it is the same. So 5. 12, 4, 3, 4, 2, 5. Yes. So which one do you prefer? Huh? The first one, the second. You prefer which one? Prefer whichever makes you happy. There is no limitation. So you use then calculator. That is what I wanted you to use. That is what I wanted you to use. Then you diverted. Anyway. Now, this is the lease liability. So down there is something they say. I want you to read through the question. There's something 300 or 30 they were talking about. 30, yeah? Can you read about that 30? What was it all about? Initial direct what? Cost. So this person, to get this asset, maybe professional fee or something, they incurred how much? 30. So that 30, to get the right of use asset, you will take this amount plus what? 30. But what they will be paying as time goes by will be what? 30, because already they have incurred the amount of 30. Are we together? Yes. So down there, you say, online, I hope we are together. Initial right of use. Initial right of use. Initial right of use, asset. You will take the lease liability, lease liability, which is how much? 12, 43, 425. That is what they were denying us. But you know, someone who has not come to class, they will say the total lease liability is 1.5. 500 times how many payments? 3. You know, well, someone will say it's 500, 500, 500, 3 times 1.5. But you should know that this 500 shall be paid in what? Future. So you discount. You have to discount because of the time value for money. Correct. Then you add initial direct what? Direct cost. Initial direct cost. We were told they incurred initial direct cost of how much? 30. Therefore, the right of use is the sum. Can you add for me that? Add for me that. You will get how much? $12.73 or 25. Thank you. And those things we are doing, we are not doing them for fun. They are being marked. So example, I just wanted you to show. We are showing, we are in transit. From there, I want us to check how you should initially recognize that asset in the books on commencement or inception. So I want you to have journal entries. So right there, journal entries. Journal entries. at the inception. Inception was 1st January 2019. Sure. Yes, that was the inception. That was the inception. That was the inception. So at the inception, you need to tell us. So here, shillings. Journal entries means when we started, which account was supposed to be debited and which account was supposed to be credited. So the lessee, you know, we are dealing with the books of the lessee. The lessee will debit the right of what? Use. So debit right of use asset. The right of use asset is this one here. 1273, 420 what? 5. Just allow me to respond to this. Then you credit. All right. So we have debited the right of use, credit out lease liability. The amount you will pay, so you can the discounted, this 1240 something. So credit lease liability of 1243, 425, because I've already paid from my cash book. When you pay, what do you do to the cash book? You debit or you credit the cash book? You credit. So credit your cash book with how much? 30,000. Full stop. And the journal has balanced. So at the inception, you debit the books of the lessee with the right of use. You credit the lease liability, then you credit your cash book. If you have incurred, what? Any cost. But most of those questions, your cost, that cost is not there. So you just find this is what you debit at the same amount is what you are doing what? Crediting. Good. From there, I want us to prepare something called lease amortization. It's called what? From your end. Lease amortization. How do we read this thing? So that lease amortization. Schedule. Hapa kuna kizungu kingine ya UK. Schedule. So we write whichever scale makes you happy. So lease amortization schedule.
I've missed the point.
That's what go. Lease amortization what?
Something I'm not
And
getting.
nowadays you have network, which is very inspiring. So right there,
Mwalimu.
amortization, somebody is talking, yes?
The 30,000, where are we classifying it at?
That is John. John, you are saying the 30,000, where?
You can see the, okay, cash book. Okay, fine. I had not seen the last line.
It's okay, yeah?
Yes.
Perfect. So let's have lease amortization. Lease amortization schedule. Lease amortization schedule. So you'll write for me here. Balance brought down. Interest 10%. Interest is 10%. Then rentals paid. Rentals paid is constant. 500, 500, 500 every year. Then you get balance downwards, carried down. So any amortization, listen to this, any amortization schedule normally ends here. I have to clarify because when I said you'll be doing some amortization of loans, it normally ends here. But I want to extrapolate mine because of something which is going to follow me down there. So I want to work it here. So write for me here, non-current liability. If you have space, you can write it full. Then current liability. Have that one there. Yes, please. Yes, it's already marks. 10, yes. Apple 3 was because you know what would have even done? Determining this, I will give you 1 mark. Then journals, the passing journals, I should give you another 2 marks. Then we proceed here, I give you 1 mark. Then, but this one I can give you so many marks. But you are not coming out like that. I hope online everybody is now okay. Some people are not seeing the right side. I hope now you can see. So the year we started in 2019. So write for me here 2019, 2020, 2021. Rentals are constant at 500. And once you pay, you reduce the obligation. So the rentals you subtract. Whatever has been paid must be subtracted, and it is constant, like that. Balance brought down is the lease liability. Please let's get this right. Actually, apart from this question, in all those others we will do, the lease liability will be equivalent to the right of what? Use. What is making this one to be different is that these people have already paid what? 30 has already been paid. So you cannot amortize what you have already done what? Paid. So that is out. So you amortize the lease liability. In which case, the lease liability is 1243. What what? 5. So 10%, we have agreed to round off. So if we round off to what number? 1243, 43. Sure. If we round off to what number? Okay. Good. So to get the closing balance, you take the opening plus the interest minus what you have done what? Paid. It's simple. You are to pay your landlord 12. Then the landlord is saying, if you delay bringing that rent, I'll charge you interest of 124. So what is your total obligation? This plus this. But you have taken how much? 500. So what you are paying should reduce both the principal and the interest part. So what is remaining? The balance carried down. 867, 768. Have it there. Don't step here until we go to year 2. So the balance carried down at the end of year 1 becomes the opening in year 2. So this is 867, 760 what? 8. Why deduct interest? Hey, have we deducted interest anywhere? Online, confirm from your fellow student there. Have we deducted interest? Wait, the figure you have given me, you have deducted interest or you have added interest? As of Ogma, this figure is not, interest has not been deducted. Interest is capitalized, is added. Or now he has said, why are you adding? Why are we adding interest? Don't take it more professional. It just be normal. Why are we adding this interest? This one. It's simple. You see, as someone is telling you, you know this one, actually lease in quotes is a special loan. Do you agree with me? Lease is like a special loan. So I will tell you, this is the liability, which is the loan you have. But at the end of every year, I'll be charging you interest at how much? 124. So you add interest to the liability. Then what you pay is what you're supposed to subtract. So I hope you have understood. I hope you have understood why it is happening. Vera is telling you it is part of the repayment, like a loan, which I'm saying, it is part of the payment, a liability added, all that. I hope you have understood the concept. If I give you my money today, okay, you have understood, so I should not waste my energy anymore. So this one, 10% of this rounded off, 86777. Sure. Give me the balance carried down. 454, 545. I want us to stand there, everyone to be there. Don't proceed past there. Because when we will go to the balance sheet, these two elements normally give students headache. So I want your full concentration to hear how they come up. What is an uncurrent liability from the normal definition? An uncurrent liability is an obligation which is not expected to be settled in the next 1 year. So that's the definition. Long-term debts, that is an uncurrent liability. So at the end of 2019, we have not paid, let me call this person here the landlord. Landlord here is the lessor. We have not paid the landlord a total amount of how much? 867. So if you are sure that the whole amount will be paid in the next 1 year, when we are talking of the next 1 year, is by the end of the year 2020, because we are checking 2019. So if you are sure 867 will be paid in the next 1 year, which is 2020, then the whole amount is recognized in 2019 as a current what? Liability. It's a short-term debt. But now when you check this thing here, it will not be paid in the next 1 year. When you focus ahead, check ahead. When you check ahead, how much will remain unpaid? Out of 867, how much will remain outstanding at the end of 1 year? How much is remaining outstanding? 454, 545. Because the loan we closed with and which will start January next year, the same. Out of this, what will remain unpaid? We already know. I told you that this should be prepared in advance. So you know with certainty that by the end of year 1, this amount will not be paid. So in the books of 2019, capture this amount as a long-term what? Loan. Are we together? So it means the difference, this minus this becomes what? Current. Do for me that. Do for me that, chapter. So how much is short term? Yes. 413, 223. 223. So Asokomo is again asking, why are you people? Why are you people again when you are moving to year 2? You are again charging interest on amount which you had already charged interest. Serious questions. I hope that is what you have asked. Let me just check. Brad, I'm coming back. Yes. Why again compute interest year 2 based on amount, including interest? You had already charged interest. Then again, when you are coming to year 2, the amount including interest, again, you are charging interest. Which spirit is guiding you? That answer cannot be sufficient for us. Someone is answering you here that you are just overthinking. Is that sufficient answer? Well, simple. Let's take it in simple words. You have given me a loan. Sure. Then our agreement was the loan was 10. Let's just say 10,000. Then this 10 was to pay in 2 phases. But each phase where I'm paying, I'm supposed to pay with interest of how much? 10%. So it means I should pay 11. Sure. Yes, I should pay 11. But now at the end of that year, I've paid how much? I've paid 5. How much is outstanding? 10 plus this 11 minus this. Sure. Which is 6. So will you tell me that the one which you did not pay, now that one I will not charge you interest? Hey, if I can know that you will not charge me interest on what I've not paid, you will know who are human beings. Eh? That one will put aside. So interest is charged on outstanding what? Balances. On the liability. Liability is the obligation. Obligation includes the principal amount plus the outstanding what? Interest. So we are charging interest on the amount inclusive of interest because interest is charged on the outstanding obligation. And that interest you had already paid. So how many will come here physically? Interest, check here. This was the balance at the start. Sure. Then interest, we were charged how much? 124,000. Rental, we are paying how much? 500. So if we remain with this balance, you see this interest, which is 124. Can we assume? No, can we assume? You are all aware that 124 has been covered inside what? 500. So as 124 has died inside what? 500. This amount remaining is a principal amount. It has nothing to do with interest because interest has already been settled inside this 500. It has been killed inside 5. So what is remaining has nothing to do with it and that. Even I was going far away. Interest has already, 5 is capable of settling 124. In fact, when you take to landlord, we were supposed to pay house rent of this. Then landlord said, when you come, there's interest of this, then we go with 5. Which one will the landlord cut first? Interest, not rent. The landlord will cut interest, then they tell you now you are remaining with the rent of how much? This. So I hope you have understood. Interest has already been settled. It has nothing to do with that. Are we now in order? Very good. Then, but somebody was just saying you are overthinking, and that was the answer. People can give you very tough answers here. So I want to repeat this concept here because I know people normally get confused here. At the end of year 2, I've noticed you don't have problem with amortization. The outstanding amount is 454,545. When you go back to year 1, the obligation you have, which was outstanding, is 867. This amount, remember, you must pay. So out of this amount, what you will not have paid by the end of the next 1 year. 1 year you are focusing which year? 2020. So by the end, Brian, this is, I'm explaining for you. By the end of 2020, what will remain in 2019 that is viewed as a long-term loan? Because this schedule you have it, you just mark. So when you are starting in 2019, the amount which will remain unpaid at the end of the next 1 year is this one here. So in the books of 2019, you recognize 454. So it means out of this will not be paid at the end of the next 1 year. So what will be paid in the next 1 year is how much? 413. So that is what was paid in the next 1 year, which makes sense. Can you take this 500 as to come and back to you? 500, first of all, landlord will cut the interest. Can you take 500 minus this? You will find this is the principal being paid. Just check to confirm. This minus the interest. If you take that minus, because interest is what is being deducted first. So this minus interest is the same. Yeah, so of the principal amount of 867, what will be paid in the next 1 year is 413. And when you go back to financial accounting, obligations which are being paid in the next 1 year are considered to be current. Are we together now? Brian, I hope you are okay. So, fine. For us to do 2020, we must finish 2021. So take this balance here. 454, 545. Right? 10% will give us 45455. Something like that. So just give me the balance current now. If it comes to negative, means those people will have finished paying 0. So there is nothing. There will be nothing remaining. Once you have negative, it means the payment is done completely. So let's fill in these ones. Let's fill in these ones. So at the end of, we're in 2020, the outstanding amount is 454. By the end of the next 1 year, how much will remain outstanding? 0. So it means in 2020, we don't recognize a long-term loan. You are told, make sure you pay by next year. So if you are told, make sure you pay by next year, it means by the end of next year, you don't have a liability. So long-term is 0. So to get current, it means the whole amount must be done what? Paid. So 454, 545. Zero. Sure. Yes. We are done with amortization. Thou shalt not be worried. You will just overcome, don't worry. It's even easy. When you read when you are alone, you'll even realize it is easier than you think. But now we want to give them 2 statements. I want us to give them the extract of profit and loss account and also the extract of the statement of financial position. Why am I calling them extract? Because we are not giving them the whole P&L. We don't have everything here. So you just give them what you are. You know, P&L records income and expenses. So give us those items which you are capable of seeing. Then balance sheet, give us the assets, the liabilities which you are capable of seeing. So write the name of that company. They are called Bruce. It's not possible to have negative. Negative means you have already paid. So nobody will go for overpayment. Once you get negative, even in finance, you'll be told, just record nil. It means they have paid everything. All right, so Javier what? It's called Breakwood Limited. Breakwood Limited. Statement of profit or loss. But we are preparing what? Extract. Extract means only what we can see. For which year? Huh? Are you sure? They have said for the 3 years. Huh? Anything you are doing for the 3 years. So we are capturing all the 3 years. So you will capture 2019, 2020, and 2021. Who is breakwood here? The lessee. Lessee has no income. Sure. Lessee is the one receiving. Eh? Lessee is to pay. So there is no income. You will only give me expenses here. I'm only seeing expenses. I'm only seeing expenses. So one of the expenses in a lease is the finance charge. So finance cost. Finance cost is the sweet name of interest. Eh? Instead of saying interest, you tell people finance what? When you accept a charge, you can say costs. So finance cost, just pick this interest, the ones which you are computed for each year. So here I will capture 124, 343, 86, 777, 45, 455. The asset was depreciable. So you will also capture for me depreciation. In mostly, don't ask yourself, how do you know these things? When you do like 3-4 questions, you realize these are the expenses which are always done what? Captured in the books of the LSC. So you need to get used to them. These two, these are what you do for. There is nothing else. So depreciation, check the, well, what are we checking? Right of use asset. That is what you depreciate. What was the value? Right of use? 12, 73, 425. Divided by how many years? Which one? Useful life was? Yeah. Is there anywhere mentioned 543? So where am I getting 3? I don't know the 5 we are talking about. The exact, okay. Rule number 1, the teacher is always right. So let's start from there. Let's start reasoning from that point of view. So what did they say? The equipment and the remaining economic useful life of 5 years at the inception. That is true. However, the lessee, what was the lease period? You know, there you have to be very keen. What was the lease period? Lease period. The lessee was being given asset for how many years? Read. You cannot just sit and say it's 7. The lessee was given the asset for how many years? 3 years. So why should you subject yourself to 5 years? Yeah? If you are not 5, we need 5. Can I tell you something? Which will make even sense to you. Who is telling you that the value of this, the cost of this asset is this 500, 500, 500? We can have an agreement. I'm giving you my asset. If I see you look like Dynasty, you'll pay 500. If I look at this other one, you look like semi-dynasty. 300. So it does not mean that this 12 whatever, this 1273 is the actual cost of that asset. That is what they agreed to be the right of what? Use the authority the lessee has. So lessee cannot depreciate past the lease what? Period. Finish your 3 years, return that asset to the owner, they continue with their 2 years. 5 years, and the lease is to use for 6 years. It can never happen because one of the characteristics of a lease there is that it should form, it should not surpass. It should either be, if it's 5 and below, it should not go past. Then, no, those are abnormalities. So you cannot depreciate past the useful life. And by the way, I want you to understand in layman, this is not the cost of that asset. The cost of that asset, the owner is the one who knows that he doesn't want to do what? To disclose. Once you return this asset, he gets another person. They enter, even there's another one who can even give that person 900 per year, and you're paying 5. Then again, they determine the right of what? Use, and the business goes on. And that person, again, if it is 2 years, we can even write that person. The asset is having useful life for another 6 years. We are giving you for 3. And business continues. So you don't, okay, the rule is and has always been and will always be, you as the lessee, you don't depreciate beyond the lease period. True, yes. If you are depreciating the asset, someone has given you a car, and they tell you that the car is losing value at the rate of 10% per annum. So the useful life remaining is 5 years. But you are using this asset for how many years? 3 years. You will be liable to charge depreciation for how many years in your books? 3 years. Those 5 we don't. So what do you get? It will be constant time. 424. 475. Charge. Sooner or later, I don't know when later will be, this question will be repeated. I don't think students performed well in this question. I really doubt. It has a lot of issues. The ones we are going to do, they don't have a lot of issues like this one. So, so extracts, you can add the 2 if you want. If you don't add, still there is no problem. You're just giving us what you can see. Addition will add nothing to you, will subtract nothing. Let's do the balance sheets, then we go and rest. Don't leave this question to go past 72 hours. If it goes past 72 hours before you revisit, even you will question whose handwriting was this. It's yours. You start asking, I copied from whose book, and you are present here. Make sure you revisit very fast before you forget those issues. But I like that question because it's complex. The rest are not complex. Even the one they will bring, I don't know that they will bring. All right, so the same thing. Breakwood Limited statement of financial position, but extract. Extract means give us what you can see. As at 31st of December, yeah. So 2019 capture all the way to 2020. If you are feeling there is something heavy in that question, don't worry. If you can have some powers to enter the heart of the neighbor there, you'll realize when the neighbor is undergoing the same thing, even maybe worse than the way you are feeling. So we are just the same. The difference between you is just plus or minus 1. And that plus or minus 1 depends with what someone was doing during the day. There are some people who are playing football, they are semi-tired, there are some who are extremely tired. But when they go and read, everybody will be at par. So we're just the same. No worry. Whatever defeats you is defeating the other person. Is that true? I think always. So 2019, all the way. Like that. So the lessee will recognize an uncurrent asset in the books. They will recognize an uncurrent asset, and they shall, they should not recognize the asset using the name of the asset. That asset doesn't belong to them. So they recognize which name? Right of what? Right of use asset. That is why people say here in town, naenda kwangu. Because they have right of what? Right of use. So the right of use, just bring it at cost the way it was. 1273, 425, 1273, 425, 1273, 425. However, you should record assets at net book what? Value. So to get net book value, you less accumulated what? Depreciation. You less accumulated depreciation every year. So here, depreciation year 1 was 424, 425. Kindly accumulate for me this. Add, so just move by 2, then by 3. So accumulate for me this depreciation. Then what you get is the net book value. What you get is the net book value. What you get is the net book value. You have answers? Please tell. Net book, that's net book value. 8? I accumulated here. Oh, 75. So this one will be 8. So I just been rectified for it. It is this one, huh? Yeah. 848, 950. So when you subtract 424. This one. This 424, 475. All right. The last accumulated. That figure. Yes. 1273, 425. Asset back to the. Asset back to the lessor. Not the back to the lessor. Non-current liabilities. Non-current liabilities. Here, extract, there is no balancing. You give us what you are capable of seeing with your own eyes. So lease liability, pick from our amortization and squeeze them there. Otherwise, it could have given us problems here. Just pick, they're there. 454, 45. Then non-current 2021, 2020. 00, right? Nothing. Current liabilities, also you say lease liability. customers are not serious. All these things 10 months. 3 hours, where 3 hours is for all the questions. 2019, current is how much? 413. 2, 2, 3. Then current 454, 545, nothing. That is it. You can add this if you want. If you don't want, you are still good to go. So please go through that question thoroughly, before our next question tomorrow. You don't have any other question for this in that first paper. So I'll come with a handout with some more questions, which we shall check. John, kindly touch. Let me hear what John has to say. Kindly touch on the ISPAC link. Oh, there is something I shared with you in the group, and it seems some people did not understand. I hope online you are done with this so that we discuss this, then we go. What happened? Okay, what was happening before? Let's start from before as we come to this. So, what happened? No, what used to happen? Once a student had finished CPA up to section 6, you go to ISPAC to register as a member. I hope you are aware of that. And by extension, I hope you are aware, you cannot be a senior accountant in any serious institution, like government, county government, all these blue chip companies, if you are not a member of this bank. If you are not, you can be accountant down there. But any senior accountant, because any report you write, you must put your membership number. Just check to confirm. You have ever seen? You have heard of it? Yes. So students, once they finish, they normally run to register with the ISPAC. The way lawyers, once they graduate from the Kenya School of Law, they normally go to LSK for registration. So there was an issue. ISPAC was saying, we cannot register someone who does not have accounting experience. This person has just been in school, then all of a sudden now qualified. So what they were doing, they came up with something called associate. I think this one was brought in 2012, associate membership. So when you finish and you have never been in employment, then you become an associate member. For how many years? 3. Then at the end of year 3, they assume you cannot sit in the house for 3 years after finishing CPA. You must be doing something. So from there, they now register you as a full member. So again, something came up that some students don't want to be employed. They want to have their own audit firms. They want to practice as auditors. So the regulation, when you register as a full member, you must again have experience of how many years? 3 years before you apply for audit certification. So it means if you start from associate, this person will be subjected to how many years? 6. So that one was making the profession to be quite obsolete. So what they decided, they said, not like you now, I hope you are aware, you are fully aware you are under CBC program. It's the truth. I'm not you alone. Even anybody doing PhD, anybody doing anything in Kenya right now is under CBC. Any course now, you must be attached to practical what. Like now, you will be doing the business data analytics. That is why they came. So they came up with an issue that when a student completes CPA, let them prove that they have practical experience. So the practical experience is you giving out the employer's employer's recommendation. So employer gives you recommendation that so and so has been working with us for a period of more than 3 years as an accountant. Then you take those things to ISPAC, then they call to confirm then you get registered. Another argument came up that not everybody is doing what? Working. So how do we incorporate these people? So they said, then let the students who are continuing, they register with this pack early. So that by the time they are finishing, so when they register early, they are attached to a supervisor. So the supervisor is able to tell the student, maybe you organize seminars, like in a year, at least 3. The supervisor organized 3 with the trainees, then his pack organized like 2. Of course, all of them virtual. Right? Then now you train like just simple training. Then if someone is not having a job, the supervisor should be able to alliance with ISPAC to get industrial attachment or something for this trainee. So by the end of year, by the time this person is finishing CPA, already he or she has much knowledge about the industry. So that person gets registered automatically with ISPAC. So you don't have to wait if you are not working, you wait for 3 years associate, then 3 years full membership. It wastes a lot of time. So it's just an easy way of easing the bureaucracy which was there in registering accountants. So I hope you have understood. Yes, so that is all about that ISPAC issue. There is no renewal of fee. Even attending the meetings is free for students, for trainees. Yes, because, and you can't lie, you are a trainee and you're not a trainee. When you are registering, I don't know, is there anyone who register? There is option. Are you registering as a trainee or as who? And if you're a trainee, they must link, they will check your details with CASNEM to see your registration and all that. Then you're a trainee. So trainees, they are there without any cost. Because remember, they said in their mind, these are people who are not working. But I've seen students now they prefer, even if they are working, to register there because you and the HR sometimes giving you recommendation. You know the HR can give you recommendation without you knowing that letter is bad. Yes. That one Fiona has been an employee, one destroys everything. So there's a meeting they said was supposed to be within this week. I'm not sure whether it will be there, but soon they are organizing that for those who have registered. So you can select me as one of the supervisors, one of the few supervisors. So you can select my name there. It's good to have someone you know, because you will select someone who tells you that we must have one physical meeting, and that meeting, when you reach Kilipi South, you turn left. That is when. So in that portal, but you know my name. My second, did you write it? I need to write it. Yeah, you just start this. My name is Dennis with single N because the other one had been destroyed by you people outside here. So let me organize the third one. Those are my full name. Membership number, you search 25116. Yes. So you can select. Already, I think I have 32 trainees. So I'll be organizing the first, I think next week, virtual meeting before ISPAC. Then, so that when you go there, when you are asked, as you are supervisor done something, you say progress. So we'll be informing that. So thank you so much, John. And you can see my full name, no problem. Even if you have a full name. Yes, please. Oh, it can't be seen.
I'm actually registering right away, so.
Come in.
Bado, sawa. Yeah.
You are saying can? Yes. Associate now can join so that they are the process. Yes, I think it's. Oh, Vera is saying I share the handout early because there are people they want to do those questions before tomorrow. Wow. So allow me to share once I get the office there. Right now, I will share before I forget. Those who don't sleep can do the question.
Register hiyo. Nikimaliza nipewe namba mapema.
You can go. But since we're going to hear the video, there. Sawa.